The Federal Reserve, America's central bank, is like a juggler spinning plates. Their job is to keep inflation in check while also ensuring the economy grows. Too much inflation, and prices skyrocket, eroding your savings. Too little growth, and jobs disappear, stifling opportunities. In 2025, the Fed faces a tricky situation. Inflation remains stubbornly high, driven by rising costs for everyday items like groceries and gas. Remember those $10 cartons of eggs? Yep, inflation is why. To combat this, the Fed hit the brakes on its easy money policies. They paused interest rate cuts, making it more expensive to borrow money. This is intended to cool down the economy and hopefully tame inflation. However, some experts worry that the Fed's actions could backfire, potentially tipping the economy into a recession. The balancing act continues, and the stakes are high. Former President Trump has thrown his hat back into the ring, and with him come proposals for significant tax changes. These changes, if enacted, could have a major impact on your wallet and the overall economy. Trump's plan includes making his 2017 tax cuts permanent, which would primarily benefit corporations and wealthy individuals. He also proposes slashing the corporate tax rate to 20%, a move he claims will boost business investment and create jobs. However, critics argue that these tax cuts will primarily benefit the wealthy and do little to help the average American. They also worry that the cuts will balloon the national debt, leaving future generations to foot the bill. The impact of Trump's tax proposals remains uncertain. Will they lead to economic prosperity or exacerbate inequality? Only time will tell. The stock market has been on a tear in recent years, reaching record highs. But is this bull market about to run out of steam? Experts are divided. Some analysts point to the rapid rise of artificial intelligence as a sign of continued growth. They argue that AI will revolutionize industries, creating new opportunities for investors. Others, however, caution that the AI hype may be overblown, leading to a bubble that could burst. Adding to the uncertainty is the concentration of market power in a handful of mega-cap tech companies like Apple, Microsoft, and Google. These tech giants have enjoyed massive profits, but their dominance raises concerns about competition and potential market manipulation. For everyday investors, the best advice remains the same. Diversify your portfolio, invest for the long term, and don't panic when the market inevitably experiences volatility. The housing market is like a roller coaster, with its share of thrilling climbs and stomach-churning drops. After years of soaring prices, the market is finally showing signs of cooling down. Mortgage rates remain elevated, making home ownership less affordable for many. This has led to a decline in home sales and a slight dip in prices in some areas. However, inventory remains tight in many markets, particularly for entry-level homes, keeping upward pressure on prices. Experts predict that the housing market will remain volatile in 2025. Some metros may see price increases, while others could experience declines. Factors such as interest rates, local economic conditions, and inventory levels will all play a role. If you're considering buying or selling a home, it's crucial to do your research, consult with a real estate professional, and be prepared for a potentially bumpy ride.